Welcome back to Morning Trade Live. Time now for the Chart Master. Jenny Horne takes us through the fundamentals, and Rick Ducat goes through the technicals. All right, Jenny, I know we've got a lot to get through. We've got some heavy hitters on tap for next week. Well, let's start out with Tesla. It reports Tuesday afternoon. The stock is a little bit higher today, adding to its advance so far this year. But what should we expect from Tesla?
You know, Dan, I will say I'm going to maybe for the first time in 6 months take a step away from Elon Musk regarding Donald Trump and just focus on what we're expecting from Tesla, because I know he's been very much caught in the crosshairs of like the political uncertainty right now. But Tesla, while it does, I think, oftentimes trade in step with some of Elon Musk's decisions and ties to the current president, the report will not include that. So we're watching for their fourth quarter earnings. Automotive gross profit margins is considerable. They're roughly 495,000 vehicles delivered, were a quarterly record for the company. And so as a result, we are expecting some operating cost leverage as a result of these higher volumes. Also expecting to benefit from the raw materials deflation, though this might still be partially offset by the lower average selling price. I also think what will be huge is the autonomous driving software progress. As we know, this year they expect to launch their level 3 FSD unsupervised software in both California as well as Texas, and roll out their level 2 FSD software in Europe as well as China. These will be major milestones for their robotaxi service if they're able to obviously meet that expectation for a timeline, as well as any new vehicle launches. They do plan to launch now this smaller SUV named the Model Q later this year, likely to have a price range in the mid 30,000 range, and will allow them to hopefully compete in this more affordable SUV market. Many say this is a pretty key growth driver as far as ramping up those deliveries for this year as well as the beyond for the foreseeable future. Also, one area of their business I think that does not get enough credit is really their energy storage business. And we're expecting energy generation storage to see some record battery storage deployments. And also they opened a new factory in China, which aims to double their production once ramped up. So a lot to be excited about when it comes to Tesla specific fundamentals outside of course, the volatility that is their leader, Elon Musk.
Yeah, it will certainly be a return to paying attention to the fundamentals. And I know that was the case last quarter where we actually saw some reaction to the fundamentals. But then there's always the argument of, is Tesla a car company, which that will matter when the earnings come out, or is it an AI company? All right, Rick, though, let's talk about the chart. What are you seeing when it comes to the chart for Tesla?
Sure, always one worth watching here as we, kind of wind down the first month of this trading year. And we can see now that Tesla had a big breakout. We had a series of horizontal resistance here all the way back down near 265. Then our big push to the upside topped out here near 488.54. Then you could say we have a downward sloping trend line connecting these highs based on like the closing prices. We did have some intraday movement beyond those points, but it matches up decently with some of the closing prices there. From this point, you could either try to extrapolate that trend line, put it along the lows and make a channel, or if we do kind of bounce around a little bit more, it could also be more of a triangular shape here. So some things to consider. However, we are at this green line right now, 415. That's right about where we are with our 21-day exponential moving average. That was our low points that we saw here. And then price really struggled to close above that area for a bit as well. RSI, downtrend broken, slightly above the 50 midline, not really exhibiting a strong directional bias at this time. But we are in bullish territory, and we're above that 21-day EMA. So if we were to move to the upside, our recent relative highs come in pretty close to that +1 standard deviation channel near about 441. Then those old highs near 488.50 +2 standard deviation channel comes in near 524. To the downside, if we did break through our yellow 21-day EMA, this is an interesting area. 63-day EMA, linear regression line, and in another old ceiling from back here near about 360 or so.
All right, that's the chart for Tesla. Jenny, let's pivot to Microsoft. Midweek, we get their numbers. They're due out Wednesday afternoon. Looks like the street is expecting some more growth when it comes to earnings, but take us through the overall expectations.
Well, I will say I found it very interesting. This has nothing to do with earnings, but since we're talking Microsoft, that their CEO at Davos did say that regarding some of this massive AI investment that Elon Musk, fittingly so, has been criticizing, that these companies don't have the balance sheet to perhaps see that $500 billion realized. Microsoft CEO said they're good for their $80 billion. So rest assured, it doesn't seem like cash is necessarily any type of concern for this company, which frankly, what I do think is so huge is that you look at their revenue right now, it's about 4% derived from AI. So that's such a small footprint. And I know this company is so massive, so it's all context, but that does leave then the street still very enthusiastic about where we could run from here and more upside as far as their AI offerings. I mean, we are continuing to expect to see earnings that are hopefully benefited by the M365 Copilot, which is their AI-driven productivity tool. Also, we've seen some really, so far, positive enthusiasm from those that have seen these various products, but the rollout has been slow due to some of these government data concerns. So right now, Street seems to really like this name. I was reading a Jefferies note, frankly, that was nothing but upside, pointing to Microsoft's AI expansion, as well as the fact that they are still on track to hit $10 billion in AI revenues as far as their run rate, which would make it its fastest growing business segment. No surprise there, I think. But also, that said, again, it's still a relatively small portion of AI, or their revenue is AI. Azure is also another major component of, naturally, that AI growth. So I do think that when you look at the coverage on this name, you got 53 buys, 4 holds. There's no sells. That tells you everything you need to know. But a lot of the question does remain of, with these companies spending so much money, when will we start to see results? Because right now, CapEx seems to rise for all of these major tech names quite considerably, even on a sequential basis. When will we actually start to see that then pay off in terms of returns? Because I think that will be a major focus for a lot of these names next week.
Agreed, but I just love how you started this segment, Jenny, with the comments from Satya Nadella, and that was that CNBC interview where he said, "Look, I'm good for this $80 billion." It feels like billionaire bros fighting it out in terms of egos, right there. All right, but Rick, before we kind of take a tangent, take us through what the technicals look like for Microsoft.
Yeah, so this one is a bit of a different chart here. We can see that this is much more sideways. Despite making some progress during the past 52 weeks, you could make the argument that we've been stuck within a range for a while here. It's a bigger range, but we saw a period of symmetrical triangle type price action, once again matching up decently with the closing prices here, then the highs here. We did have a breakout to the upside there, and then you could also put a line going along those closing prices. So this symmetrical triangle shape did break through to the upside. We topped out roughly around 454. That's a high point during our high closing price during our downward movement after we hit those highs there. So this could be a point to keep an eye on going forward here. We can now see as well a shorter term downward sloping blue trend line was in play. Our price action took us back to these old triangle boundaries and all the way down to our purple 250 2-day EMA before getting a big move to the upside. Took out our shorter term moving averages pretty quickly, broke above those old highs. Now we are sitting near about 445 or so. RSI bullish. Crossed above the 50 midline recently here. Green trend line still in play after bottoming out near 35.50. So when we look at our other information here based on volume and standard deviation channels, right about where we are now is a notable volume node and the +1 standard deviation channel. So there's a bit of potential resistance to work through here. Then our trend line roughly lines up with that old high close that I mentioned. Beyond that there, the +2 standard deviation channel comes in near 462. To the downside, we've got our moving average confluence with our blue linear regression line near about 430, 435 or so. And then our triangle, our purple 250 2-day EMA, and our volume profile point of control near like 415 could be a major line in the sand.
Okay, that could be a major line in the sand. Microsoft shares a little bit lower today, but again, they've got earnings in front of them next week. But let's stick with Wednesday, Jenny. Meta Platforms also set to report. Meta had a big bullish price target increase this week. What's the expectation for Meta as it heads into earnings, Jenny?
So I will say that we're not straying too far away from our billionaire bros conversation, because Mark Zuckerberg has definitely been more so in the news than I can recall in in recent years, and not necessarily in a bad way. I think that this was seen as a business decision to tie himself closely to an administration that is shelling out cash for areas in which Meta would benefit. And I was also reading this really interesting report from one of these internet tracker sites that says actually Meta has not seen any fallout regarding the fact that now they're going to stop censoring their platform and somewhat update their various privacy features. There hasn't actually been really a decline or an uptick in users as far as that announcement is concerned, which is hugely positive because that did draw a lot of backlash. I believe you mentioned that the substantial price target we saw this week that was out of B of A was $710 from $660. That's also definitely hugely encouraging that the street still definitely sees some upside from here. I mean, there's 62 buys in this name, 8 holds. There are 2 underperforms at current levels. But when you look at their push into AI, I think that the amount of spend is just astronomical. Right now, we're expecting CapEx this year to be between 60 and 65 billion, which is a pretty substantial increase driven by AI and a massive new data center. It's a 70% increase over the 2024 CapEx projections. That comes just, of course, days after we saw that unveiling of the Stargate $500 billion plan for all things AI. Outside of that, spending is expecting to continue to increase. Also, we know in 2024 they did break ground on around 6 new data centers, and they plan to bring at least 1 of the gigawatt of computing power online and build this data center. They said that would be so large it would cover part of Manhattan, which I think that you need the energy to do that, but I guess I respect the ambitions. And it also has been seen as terms of ad dollars, if we could continue to see more unknowns regarding TikTok, which is now, of course, in that 75-day extension. That bodes well for Meta, which is seemingly a beneficiary of another app's demise. Although I will say that Meta is still larger than TikTok, pretty substantially so. It's almost double as far as its global users. So I don't necessarily see the fallout of like these people then will migrate to Meta. I'm assuming that there's some massive overlap there, but ad dollars, huge. And there's other aspects of this business that are not just AI. Of course, ad dollars will be watched. Also, their Reality Labs unit, which is still losing money, but somehow doesn't seem like price seems to care. As far as the street coverage on this name, it's one of those segments that gets highly overlooked, and I think that's on purpose.
All right. And then, Rick, take us through what the chart tells us for Meta Platforms.
Yeah, it's been a strong year for this big tech company here. Pretty consistent trend line, starting with these lows in late summer here and connecting these low points that we subsequently hit. During our rally here, we had a period of resistance here, consistent ceiling near about 597, a big push to the upside when we did eventually break of it to top out near 638. However, we retreated back to our trend line at this point, as well as near our orange 63-day EMA, which has been supportive the past several times. It's been tested right about here as well here. And more recently, we crossed above our 21-day EMA and broke above this shorter-term white downward sloping trend line. Now, new all-time highs here on an intraday basis and on pace for a new closing high as well here. RSI, triangular shape for a long time here, but it's looking like we are perhaps breaking out above that trend line, not really making a strong new relative high above this previous high point back here. So that would be something to keep an eye on for sure, something worth watching. If we were to look at our standard deviation channels and volume profile, +1 standard deviation channel comes in right around 663. That could be an area to watch if we do hang on to these elevated levels here. To the downside, trend line, linear regression line, our blue line there near 607.50. Then our old horizontal resistance matches up with our orange 63-day EMA near about 596, 597.
All right, that's the chart for Meta and an outlook as we head into earnings next week. It would be interesting to watch as well, Jenny, as the year progresses, how much that proximity to power matters for these billionaire bros that we're talking about. Jenny Horne, senior or markets correspondent here on the Schwab Network and co-host of Next Gen, and Rick Ducat, chart master, who I also like to call the Duke of Data.